Major crypto news, whales accumulating, the flippening explained, and Bitcoin market manipulation. Hello lovely YouTube family, welcome back to Tech and Vision. In today's video, we are going to talk about major crypto news, whales accumulating, the flippening explained, and Bitcoin market manipulation. Before we start, I would want you to hit that red subscribe button so that you never miss out on any of our videos. A whale is usually valued at roughly $10 million US. A minimum of 1,000 Bitcoin is required to become a member. The most valuable whale is worth $50 million. There are exceptions, such as the originator or those who purchased them early and are now worth billions. They are no longer whales, but rather cryptocurrency representatives. Anything above that is either a venture capital company or a Bitcoin exchange. To change a small cap currency from $10 million to $100 million, a whale just has to spend $1 million US. You notice how a coin went up 500% in a single day? Pump and dump is exactly what it sounds like. According to Investopedia, a Bitcoin whale is an individual or entity who has a significant quantity of Bitcoin. There are about 1,000 people who hold 40% of the stock market. Whales have the ability to influence currency prices, and given Bitcoin's recent volatility, they are coming under more scrutiny. According to industry figures, roughly 13% of all Bitcoin, or over $80 billion, is held in little over 100 individual accounts, according to The Telegraph. It goes on to say that little under 2,500 known accounts, out of a total of nearly 100 million, own the top 40% of all Bitcoin, about $240 billion. According to CoinDesk, the number of addresses holding more than 1,000 Bitcoin has reached a new all-time high of 2,334. The Sun stated that single trades by such whales may cause enormous fluctuations in the price of Bitcoin, swamping any fluctuations by smaller investors. On January 8, Bitcoin hit a new high of $41,973. On the other hand, Insider reported on January 22 that the cryptocurrency was on track for its greatest weekly price drop since September. By January 23rd, it had recovered to roughly $32,170. Back in November 2020, CoinDesk studied data from crypto exchange OKEX to provide a possible explanation of how whales were able to influence prices as the cryptocurrency soared. During that Bitcoin run-up, institutions and whales were able to buy dips and oftentimes sell when prices went up. That left the majority of the retail investors scrambling to chase the rally, the report said. David Gerard, author of Attack of the 50-Foot Blockchain and a known crypto skeptic, was quoted in the Telegraph report as saying, "The big players can easily move the price, because the Bitcoin trading market is very thin. Any one of them could crash it." He stated there isn't a lot of accessible volume to trade, and that there are a lot of trading antics that don't happen in regulated markets. Janet Yellen, Biden's candidate for Treasury Secretary, has proposed that politicians regulate cryptocurrencies like Bitcoin, citing fears that they are mostly used for criminal purposes. According to Yahoo Finance, a Biden government might be pro-crypto due to the appointment of crypto specialist Gary Gensler as SEC chairman. In January 2020, Insider wrote an op-ed claiming that the federal government's signals on cryptocurrencies had been confused. The article was written by James Ledbetter, Chief Content Officer at Clara Media and editor and publisher of FIN. It stated, if the US wants to keep up with the global development of digital currencies, Biden's team must clearly answer some basic questions, like which ones will be regulated as securities, and will a Bitcoin-based ETF be approved? It remains to be seen whether these questions will be answered by the administration anytime soon, however. The word flippening was invented in 2017 to describe the prospect of Ethereum, ETH, market capitalization exceeding Bitcoin's, BTC, market capitalization. As a result, the term refers to a hypothetical future event in which Ethereum surpasses Bitcoin in terms of market valuation. A crypto market currency's capitalization, or market cap, is roughly defined as its circulating supply multiplied by its current market price, although other definitions don't account for lost coins or tokens. Bitcoin is now the most valuable cryptocurrency, followed by Ethereum. Although Bitcoin has always been the most valuable cryptocurrency in terms of market value, its market share has dwindled in recent years. The decline was most noticeable in mid-2017 and early 2018. Many Ethereum enthusiasts were hoping for the flippening to happen at those times. Speculators predicted that Ethereum's superior flexibility and capacity to build smart contracts would push it ahead of Bitcoin in these rankings, but the flippening never happened. This flippening, in my opinion, isn't all that important, because Bitcoin and Ethereum are essentially solving two distinct problems. Thus, one being valued more than the other doesn't imply one is winning and the other is losing. This new scenario, dubbed the flippening by market watchers, is informally described as the time at when a competitor blockchain network replaces Bitcoin as the largest and best-financed blockchain. The notion, which was sparked by an increase in cryptographic asset inflows, already has a dedicated hashtag and website. Given that Bitcoin pioneered and popularized blockchain technology, the development might usher in a new era of diversity and innovation for the embryonic industry, which was previously characterized almost entirely in terms of Bitcoin. Bitcoin accounted for more than 80% of the overall cryptocurrency market share at one point in 2017. However, this figure has risen to more than 90% at other periods. Alternative cryptocurrencies, on the other hand, have had strong inflows this year, pushing their entire market valuation to hit a new high of around $117 billion today, according to CoinMarketCap, a more than 500% year-to-date rise. While some observers stressed the Ethereum network's potential, others pointed to the apparent challenges Bitcoin has had recently as a cause for this development. Bitcoin developers and entrepreneurs are still figuring out the best solution to fix the cryptocurrency's persistent scaling problem, which some claim is restricting the cryptocurrency's potential as a means of exchange. However, this may improve its usage as a store of wealth. Currently, blocks on the Bitcoin blockchain may only contain up to 1 megabyte of transaction data, limiting the number of transactions that may be processed. Proposals to expand the block size have failed thus far, and efforts to employ segregated witness, a solution that would lower the overall size of each individual transaction and allow more of them to fit into blocks, have also failed. Other initiatives have tended to be short-lived or divisive. Bitcoin is still stuck at the scaling dilemma, says Marius Rupsis, cryptocurrency trader and co-founder of fintech startup InvoicePool. If some kind of agreement were achieved, Bitcoin could regain much of its dominance. However, because the Bitcoin community has failed to find a solution, he claims that Ether is profiting from the situation. Rupsis predicts Ether's market capitalization, or the entire value of its available token supply, will overtake Bitcoin as markets react to these events. According to Tim Enneking, managing director of the cryptocurrency hedge firm Crypto Asset Fund, Bitcoin, the first cryptocurrency to grow, has become victimized by its own success. He also noted that Ether has benefited from coming into existence after Bitcoin, telling CoinDesk, Ether has learned and has fewer problems, as well as a comprehensive, coherent, more or less, roadmap going forward. It also has leadership. Bitcoin has none of that. And first-mover advantages dissipate if one doesn't continue to innovate. Ethereum might become the dominant blockchain, according to Charles Hayter, co-founder and CEO of cryptocurrency trading firm CryptoCompare. Ether has a strong chance of surpassing Bitcoin due to its strong network effect and ability to negotiate the governance issues that Bitcoin has been subject to, he said. When discussing why Ether's market cap would overtake Bitcoin's, some market experts stressed the crucial role performed by token sales, or ICOs. Investors buying these tokens, contracts on the Ethereum network, typically utilize Ether because they don't want to lose out, since these offers allow participants to trade Bitcoin and Ether for digital tokens that enable exposure to new businesses. Furthermore, the concentration of Ether in the hands of a smaller group of firms is putting additional financial strains on the network. This keeps many Ethers locked up in new projects, and fewer Ethers are available for trading, Rupsis noted. Bitcoin entrepreneur Charlie Shrem offered a similar sentiment, noting, right now, an immense supply of ETH gets locked up due to ICOs. This severely reduces supply, and with each offering, more tokens are locked up, he explained. Still, he noted, companies that use this kind of funding would sell part of the Ether tokens they raise to pay for development, so sell pressure might rise if this gets serious. Tesla and MicroStrategy are the newest Bitcoin whales, as well as the two most prominent instances of a new phenomena in which Bitcoin is used as the backbone of a corporate treasury approach. When Tesla revealed their $1.5 billion Bitcoin acquisition in early February, the price of Bitcoin soared 15% to $44,000, setting a new all-time high. Tesla's move follows MicroStrategy's run of huge Bitcoin purchases, which have totaled more than $2.1 billion since August 2020. Bitcoin's price has risen from roughly $11,000 when MicroStrategy made its initial buy to $53,000 today. Many more corporate companies are anticipated to follow Tesla and MicroStrategy's lead in 2021 and become Bitcoin whales. Aker, a Norwegian corporation, for example, formed a division to acquire Bitcoin this week and invested $58 million in it. Meitu, a Chinese business, bought $40 million worth of Bitcoin and Ethereum at the same time. Whales can also be high net worth individuals who see the cryptocurrency market as a new way to make money, or massive institutional investors like hedge funds and proprietary trading desks that are betting big on where the market will go next. Early Bitcoin advocates like Roger Ver and the Winklevoss twins were most certainly whales in the past. The Winklevoss twins revealed in April 2013 that they held about 1% of the total Bitcoin supply. They are reported to be in possession of over 170,000 Bitcoins. MicroStrategy was well aware of its capacity to impact the market when it first began purchasing Bitcoin in 2020 and has been very open about the strategies it used to avoid pushing the price higher while completing its purchases. MicroStrategy announced the purchase of 21,454 BTC for $250 million in a news release. Importantly, the business used a macro buy approach, buying tiny sums in thousands of trades to guarantee the massive acquisition would not have an outsized influence on the market. To acquire 16,796 BTC, disclosed 9/14/20, we traded continuously 74 hours, executing 88,617 trades, approximately 0.19 BTC each 3 seconds, tweeted MicroStrategy CEO Michael Saylor. That means a purchase of approximately $39,414 in BTC per minute, but all at times we were ready to purchase $30 to $50 million in a few seconds if we got lucky with a 1 to 2% downward spike, he said. The company's acquisitions have continued, and it now has 90,859 BTC in its possession. Saylor is confident in Bitcoin's future price rise. Therefore, this investment is unlikely to be a viable sell opportunity in the near future. That's all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing video from us.